please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now let's get straight to another exclusive then. CNBC TV18 has accessed the Parliamentary Finance Panel draft report on NPAs. The report makes some interesting observations as well as some suggestions. Ritu Punaboyan is standing by with all those details. Well, Ritu, take us through the concerns as well as the suggestions made by the panel.
The parliamentary panel has observed that it is because of the RBI's action on NPAs that there has been a sharp uptick in bad loans in FY18. It has also, observed that in the first quarter of this financial year, public sector banks had to write off around 31,000 crore. That government should basically suspend the latest IFRS norms for Indian banks. The panel is concerned that public sector bank deposits are not increasing at a fast pace. It has also recommended that the banks should avoid knee-jerk reactions like, for example, banning LOUs. As far as small NPAs are concerned, the panel has said that as far as small cases are concerned, which are less than 200 crores, those should be resolved at a fast pace. NCLT should be beefed up, and also RBI's request for more powers as far as public sector banks are concerned, that should be examined by the government. This report, which is in the draft format as of now, is likely to be presented in Parliament during the winter session. With that, it's back to you.
Okay, moving on then, in what is one of India's biggest infrastructure deals, Reliance Infrastructure's board has agreed to sell its Mumbai distribution business to Adani Transmission. Now, the total deal value is at around 18,800 crore rupees. Most of this money will be used to pay down Reliance Infrastructure's debt. Kritika Saxena joins in with more details. Kritika, sigh of relief for Reliance Infra. What were the key takeaways from the management yesterday?
Here are the top things you need to know about one of the largest infrastructure deals in the country. All the necessary approvals are in, and as a result of that, Reliance Infrastructure has finally sold off its Mumbai power distribution business to Adani Transmission. Now, the deal has been done at 18,800 crore rupees. Reliance Infrastructure has a debt of 22,000 crore rupees. So they will use a significant portion to retire debt, but there will be about 7,000 crore rupees of debt left into the company. The company expects to get some capital through some arbitration awards that they have won, some that they are expecting to win, and as a result of that, they believe that they will be debt-free by the end of next year. So what exactly is left in the company? And that's the question that investors are asking. The Delhi distribution business, they have no plans to sell that, has a customer base of about 4.2 million. The Mumbai Metro project, despite auditor concerns, the company says that it is on track to grow, and they are done with capital investment of that business. It has a revenue of 150 crore rupees and EBITDA of 35 crore rupees. These numbers haven't been revealed earlier. Roads project currently has about 11 projects at this point in time. They had shelved InvITs, and at this point in time, the company says, despite reports of them looking at asset monetization of roads business, they are not looking at selling. The asset-light engineering and construction business is another focus area, and the defense business, they say, is an area that they are going to bet big on. They will be investing in, and it has a 10-year horizon with respect to the kind of revenue potential that they think it will bring into the company.
Well, on that note, let's listen in to what Chairman Anil Ambani had to say about the company's debt reduction plans going forward.
The company will become debt-free based on two clear, visible elements. One, based on arbitration awards already won worth 6,000 crores in cases of the Delhi Metro Rail Corporation, in the case of Goa Power, and in the case of National Highway Authority of India. We expect this 6,000 crores will move to the company. Two, we have over 5,000 crores of cash inflows from the past regulatory assets related to the Mumbai distribution business. Reliance Infrastructure expects to be a zero debt company next year and will aim to be a top-ended credit-rated company. Our debt-equity ratio post today's transaction will fall and just be in nominal 0.3:1, the lowest in the industry, compared with our peers with their debt-equity ratios as high as 8:1. We have a further cushion of arbitrations yet to be decided worth another 8,000 crores. So when we total this, we're talking about between 18 and 20,000 crores of available avenues to deal with just 7,000 crores worth of debt.
Well, on-ground activations, concerts, digital and TV programming. Today, the non-radio business of Entertainment Network India Limited, which runs leading FM channel Radio Mirchi, accounts for 30% of its overall revenues, and in 5 years, its share will reach around 50%. Now, in an exclusive interaction with CNBC TV18's Farah Bukwala Vora, ANIL's MD and CEO Prashant Pandey throws light on the timeline for the operationalization of the new stations acquired in the second batch of the Phase 3 auctions, why the company will not further cut its ad volumes, and its aggressive plans to expand overseas. Take a listen.
The beauty about the non-radio business is that the margins are very much in our hands, and if we do a good job of planning and designing these non-radio activities, and if we can sell better, then we can actually make very hefty margins. So I personally think that the margins in the non-radio business should climb up at least to the mid-30s, if not high 30s. I think the non-radio business should become as big as the radio business, which means that the split could possibly become 50-50
How soon?
Maybe in the next 4 or 5 years.
In the recently concluded Phase 3 auctions, you acquired about 21 new stations, and now I believe about 7 are operational. So what is the plan as far as the operationalization of the remaining stations go?
October or November, we should be done with the whole lot. So we are 7 down and 14 more to go in the second batch.
And how much incremental revenues will come from the new stations that you have launched? And typically, where do you see their break-even point?
Yeah, so these are, like you said, mostly in tier 2, tier 3 cities, with a couple of exceptions maybe, and therefore their revenue potential is not really all that high. I would imagine that each station would probably do about 1 crore of rupees in a year to begin with, and then as the time goes by, they might increase from that point on. So put together, they would not add too much to the revenues of the company, but these stations are still important for another reason, and that is that they strengthen the network, the existing network in the states in which these stations are located. Now, you asked a question about the break-even point, and I frankly don't expect the break-even to be any different than 4 or 5 quarters, which is what we delivered even in the first batch.
Last year, you took a very important step, which was to cut down on your ad volumes, and you cut it down by about 15%, which led to an effective rate increasing by about 5.5%. Now, is there scope for further cutting of ad volumes even in this year? Is that something that you will consciously do?
Cutting is not easy. It comes at an enormous cost. If we knocked off 15% ad volumes last year, it was like an investment of almost 75 or 80 crore rupees, right, behind the product, because when you cut the advertising down, that's the amount of revenue loss we took on account of the advertising volume going down. But can it be repeated? I don't think so, because it is too expensive. We cut volumes by 15%, but we got a price increase of only 5.5%. So we genuinely lost revenues in that exercise. But the only way it can be repeated is if the whole industry comes together.
You have talked about exploring other GCC markets and South Asian markets. What's in the pipeline?
We are hoping to launch soon in Qatar, and if everything goes well, then maybe a couple of other cities where the work is in progress, but we don't have any licenses on hand yet. So we have partners who are looking for licenses. So we are exploring the US as a market. We are exploring Canada as a market. In the past, we have looked at Australia and New Zealand as markets. So we are going to be looking at that all over again. There are a couple of countries in Africa which are interesting. But remember, all of them will not be FM, right? So we might choose a different entry vehicle in each country, but because there is a huge demand and because revenue is there in these markets, we are going to be looking at an aggressive strategy of expanding overseas.
Okay, then time to slip into a short break. Up next, the Lodha Group faces some hiccups ahead of its mega IPO. We'll get you details on the other side. Stay with us.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, real estate major Lodha Group is all set to launch a 5,000 crore rupee IPO, but there's a hiccup. Now, a group of 23 flat owners at the company's Wadala project have moved the court against the builder for alleged project delays, shoddy construction work, and that resulted into a threat to their safety. CNBC TV18's Kevin Lee went to ground zero to assess the situation. Here's that report.
Lodha's project in Wadala, named New Cuff Parade, has had a turbulent journey. While it was launched in 2011, a series of back and forth encounters with the Civil Aviation Ministry over the height of the project has led to a severe delay. Ultimately, the DGCA ruled that Lodha would have to demolish the top 2 stories of the towers in the project. But a group of 150 flat owners is alleging that this demolition work is being conducted while they are living in the floors below, hence compromising their safety. 23 of these have filed a petition in the Bombay High Court.
Initially we started hearing tremors. Tremors are like big time. I mean, really the building was shaking. We could feel that there was an earthquake or something. And then there was debris falling all over.
Yes, 5 to 6 times the vibration was there entire day whenever the construction work was going on.
And how strong was the vibration?
You feel as if there is an earthquake, mild earthquake or something like that.
The Lodha Group has strongly refuted these allegations, stating, and I quote, "We had to remove the units from the top 2 floors since that space had to be used for terrace works like machine room, water tank, parapet wall and service lines, and we believe the true motive of this litigation to be something else." End quote. On the 14th of August this year, a bench of the High Court asked the Lodha Group to not carry out any demolition work until the next date of hearing. But alleged demolition work isn't the only reason that Lodha's customers are aggrieved.
We bought the flat in 2011. We were initially supposed to get possession as per the agreement 2015 with a grace period of 1 year, which will be December 2016. We finally got possession in June 2018.
We came to take possession in January and we were absolutely shocked with what we saw in terms of the quality, in terms of the workmanship, in terms of many problems that we had.
I was expecting a brick wall in my entire room, but this is not brick wall what we are getting. And whenever we used to close, if the door is closed, like shut, like it is banged or something due to the air pressure and all, then certain cracks are visible basically.
My agreement, the wordings are carpet area 2952 square feet, okay? And they are also written in square meters correspondingly. Whereas on the MMRDA approved drawing, it is 183 square meters, which corresponds to 1976. So that makes a shortfall of 973 square feet.
The Lodha Group has responded to a CNBC TV18 questionnaire on these issues, saying that allegations have been raised by a small percentage of flat owners and inviting people to visit the project to see for themselves if there is any truth in these allegations.
We had minor leakage issues in the flooring and the bathrooms and all. I mean, but those were solved almost immediately. We didn't have, it wasn't anything which was something which was that severely major. But yeah, but it was handled by them very promptly.
When we visited some flats in the project, we found evidence of some claims made by the home buyers, like leakages, gypsum walls, and other cosmetic issues. The Bombay High Court will take up issues apart from the demolition on the 11th of September. While we'll have to wait for the court to announce its verdict at the end of what could potentially be a lengthy legal battle, the timing is not great for Lodha developers who will be hoping that this does not cast a shadow on their upcoming IPO. In Mumbai, Kevin Lee.
Well, time to slip into a short break. Up next, we'll tell you all the cues that are coming in from the derivatives market. Remember, today is expiry day. Welcome back to Power Breakfast on CNBC TV18. Well, we were telling you about crude prices spiking up. We have the rupee as well is at all-time lows. But really, the song that comes to your mind is Nothing Else Matters, because for this series, the bulls have been in control. Manglam joins us early this morning. Well, Manglam, if you want, you could take us through a couple of lines of the song, or you could just go straight to the cues.
Well, 11,700, so close no matter how far. That's the only line I can sing. But tell you what, it's been bulls in control for not just this series, the previous series as well. You've been talking about how July the bulls kept their date with July. Well, the date extended into August as well. So 500 points plus over the last two series. And yesterday, while the Nifty fell below that 11,700 mark, it was interesting because the Nifty futures did not give up on that level, and that one still held on to 11,700. So that will be a deciding factor today. Rollovers so far have not been a problem. 53% on the Nifty, 45% on the Nifty Bank. So that's telling you, yes, there is some conviction. Let's see whether they can go all out and completely roll over a lot of the large positions as well. The put call ratio, we were talking about it being 1.94 heady levels, just ahead of expiry, has cooled off to about 1.84 as well. Higher, but then again, remember this is expiry, so it would be elevated. Interestingly, 11,750 calls saw some writing, as did 11,800. So while the Nifty gave up some gains, the bears took a chance, perhaps writing that 11,750 call, and the put writers at 11,700 felt a little jittery as well. But for today, looks like the traders may be eyeing that 11,700 straddle, which has a combined premium of about 60 rupees. So perhaps playing for a range of 11,650 to 11,750. More interestingly, for the Nifty Bank, 200 points on either side is the maximum open interest in options. So we'll have to see which way that goes. And finally, Gen Irrigation. Let's see what happens on expiry dates out of F&O ban.
Okay, Mangalam, thank you so much for that. So the bull state continuing to the month of August as well. But what could act as a third wheel is crude, because that one has inched up above the level of $77 per barrel mark. And to tell us the reasons and the setup in the commodity space, Manisha Gupta joins us now. Manisha, good morning. Over to you.
Well, thank you so much for that, Anisha. Well, yes, we have seen the commodity prices stabilize, and the crude oil prices has been inching on the higher side. Remember, this month's low has been at $71, and we are now trading at $77. So in the period of last 2 to 3 weeks, we have seen some $6 of a jump up come in for the crude oil prices. That, of course, is what we have seen in sense of prices. The support, of course, comes in from the fact that the dollar index is close to a 4-week lows. The U.S. weekly inventories have been declining for last 3 weeks now. In the previous week as well, we have seen 2.57 million barrels of a decline in the U.S. inventories. The Iran sanctions is yet another thing that really seems to be weighing on. The exports have begun to decline from Iran. The Iran loading is the lowest since April 2017, and that's what's supporting the prices. In the meanwhile, when you look at the India crude import bill, that has surged by 76% to $10.2 billion in the month of July, year-on-year basis. So for an economy like India, clearly the crude oil prices surging is not such a good news.
Okay, all right. Thanks so much for that, Manisha. Well, let's get you some trading picks then for today. Straight to our bullseye corner. Our contestants this week are Samit, Vijay as well as Manish. They're battling it out for the strongest portfolio. Let's hear out what they've picked for today.
Our first call is a buy call on Adani Power for a target of 38, stop loss at 33.8. Our second buy would be on Group Finance for a target of 366, stop loss at 329. Third buy would be on Radico for a target of 508, stop loss 461. And final call would be a buy call on Century Textile. Immediate target would be around 998. One can go long with a stop loss of 938.
My first call is sell call in Sun TV at the rate 770, place a stop loss at 785 and look for the short term target of around 720. My next call is sell call in Dabur at the rate 480, place a stop loss at 490 and look for the target of around 450. My next call is sell call in Ambuja Cement at the rate 235, place a stop loss at 240 and look for the short term target of around 220. My last call is buy call in Bank of Baroda at the rate 147, place a stop below 142 and look for the target from 160.
And Vijay Chopra's first call is a buy call on Adani Enterprises with a target of 235 and a stop loss of 210. His second call is a buy call on BEML with a target of 835, stop loss 811. And the third is also a buy call, and that one is on BHEL with a target of 84 and a stop loss of 76. Now the final call is also buy, and that one is on Sun Pharma. The target there stands at 635 and the stop loss is close to 605. But on that note, it is curtains down on this edition of Power Breakfast. From the team and myself, thank you so much for watching. Bazaar Morning Call comes up next.